Do you have a car loan or a credit card outstanding, a housing loan EMI or a personal loan? If you have any one or all of them, then you need to have life insurance in place. Not just a life insurance, but a term plan in place. Why am I saying this? You will soon find out. My name is Rajesh Hattangady, your shubhchintak, and in today's video, I'll be talking about term plans. Types of term plans. Why do you need to buy a term plan? Why most of the investors do not buy term plans? Types of term plans as well as the do's and don'ts of buying term plans. So without wasting much time, let's get invested. This is the story of Mr. and Mrs. Banerjee. Family of 3, daughter aged 12 years. Mr. Banerjee, who earns 2.5 lakhs per month, has a combined liability of closure on 1 CR. Unfortunately, the Banerjee family lost him. The lady of the house is a homemaker. What do you think? What does happen right now? Who pays up for the liability? Because when we saw, he had a lot of policies. He had a lot of life insurance policies. Unfortunately, the bankers that he banked with gave him only policies which were endowment policies, money back policies or capital guaranteed policies. And the total sum insured that he had was close to around 22 to 25 lakhs. Who is to be blamed? What was the solution over here? Who bears the cost to give the best of education to his daughter? What about the future of his wife and his parents, of course? The second example that I want to cite is a couple who stays in Mumbai and has recently gone ahead and purchased a swanky flat worth 2.5 CR. They have a kid, a son aged 3 years, and are expecting another child. Both of them are working in good companies and drawing good amount of salary. But when you looked at their individual life insurance policies, they were valued close to around 35 lakhs, 40 lakhs each. Can you imagine if something were to happen? Who bears the cost of the 2.5 CR housing loan? Who bears the cost of education for both the kids? What about marriage? What about the aspiration? What about the future income? All of this is at stake. When we look back in these two cases, everybody had a life insurance. Unfortunately, not the right one. And that is why I am here to guide you get the right kind of policies, the right kind of term plans. Let us look at the reasons as to why people actually avoid buying term plans. What could be the reasons as to why they are avoiding, and why are they not buying term plans in the very first place? Mostly all the investors do have insurances, life insurances, although most of the times when we look into their portfolios, there are money back policies, endowment policies, guaranteed plans, as well as highest NAV guaranteed plans. But what could be the main reasons as to why people end up buying these kind of plans than term plans, which is actually the right kind of a life insurance plan that people should go in for? Let us look at few of the reasons why it does happen. The bank interest or the agent's interest first before the client. There is a principle that we follow at THiiNK, client first. When we say client first, it is always the client's interest first. And yet, when we look at these kind of plans which are sold to investors, we wonder whether it was client first or whether it was the bank's interest or in the agent's interest that they sold money back plans, endowment plans, etc. Why do you think this happens? It happens mainly for one reason, is because when THiiNK recommends term plans, the payouts to us are minuscule. Whereas if we were to suggest insurance plans which were endowments or your money back plans or your highest NAV guaranteed plans, we end up making a lot of money through the commissions. Whenever term plans are suggested to investors, investors usually do take and sit on that particular decision making for a long time. They tend to procrastinate because they don't see any returns coming out of these plans. They tend to think कि ये शायद खर्चे की पॉलिसी होगी. Whatever premiums we pay, we do not get back. But hey, wait for a moment. There are some alternatives to it which I will come to in the later half of this particular video. Most of the times the agents usually would term plans as kharche ki policy because we do not end up getting any amount, and as Indians we are all used to kitna deti hai attitude. What is in it for me? मैं इतना पैसा डालूंगा, मुझे कितना मिलेगा? If this is the attitude that we have, we will end up only under insuring ourselves rather than insuring adequately for the family. Let us now look at the different types of term plans. All we knew till now is a basic term plan. A term plan is when you pay the minimum premium that is required to insure the person. There are two types in this. One is where you pay the premium, and if you survive the entire tenure, nothing comes back to us. We should be happy that nothing happened to us and we were secured in that particular interim time. We secured our family. Many a times people do ask, is there any particular option where I pay the premium and if I survive the tenure, is there something that I can get back? Of course you will, and this is the second type of term plan, which is called return of premium. All the premiums that you pay for the entire tenure, and if the insured survives the entire tenure, the premiums that were paid will all come back to you in a lump sum amount. That is called return of premium. Another type of term plan is wherein we insure self alone, or else there are joint term plans. What do you mean by joint term plans? Is if I take a term plan on myself, I am the only one who will be insured for an XYZ amount. Let us look at one example. If I were to insure myself for 2 crore rupees term plan, my spouse in a joint term plan will be insured for 50% of my sum insured, that is 1 crore automatically. This happens in a joint term plan. I have option of insuring both of us separately. I could be insured for 2 crores individually, and my spouse could also be individually be insured either for 2 crores, 1 crore or 5 crores. These are two different types of term plans that we can avail of. Many a times younger couples, both of them working, usually opt for joint term plans nowadays because the benefit of having both of them insured under one policy is extremely attractive for them. We always talk about inflation. When we talk about inflation, term plans also can automatically increase the sum insured or decrease the sum insured. For example, there are two options that you get in term plans. One, in case if I am insured for 1 crore of rupees and as per inflation I want my term plan to keep increasing every year by either 5% or 10%, I can opt for it. And similarly, in case if I feel my liabilities are going down by the year, I can also look at decreasing my sum insured in my term plans by 5% or 10%. These are some of the permutation combinations that you can work out on your term plans. If you need some more details, kindly get in touch with us, and we have left a form in our description box. Do let us know whether you are interested to get some quotes from us. What are the do's and don'ts of buying term plan? Procrastination. Whenever you have to take life insurance and want to cover up for all your liabilities, I do not think so that you should ever procrastinate. So the earlier you take a life insurance and specifically a term plan, the better it is for you. Term plan usually will have medical tests which are mandatory. One needs to undergo medical test before applying for a term plan. Based upon the medical test, the insurance is either given or rejected. Remember, in case if you are a smoker, the premiums are different as in a smoker category. For people who are non-smokers, rejoice because the premiums are pretty attractive for all of you. For smokers, if you have quit smoking in the last 1 to 5 years, you still need to write a smoker category because in the medical test, there could be times that the nicotine can be traced. At THiiNK, we always emphasize on taking and emphasizing on the term plan and the base term plan sum insured. There are a lot of top-ups that are available in terms of surgical care, accidental policies that can be added up into your main term plan. Remember, please put emphasis on buying the right kind of a product first. All of these are toppings like how you order a pizza at the pizza counter. The pizza is more important, not the extra cheese on that as a topping. All the questions that are asked in the application needs to be answered correctly and in the right spirit. Do not hide any material facts or information that might go against you during claims. There are some of the burning questions that might be there in your mind. Two of the most important burning questions. One is, you might ask, Rajesh, how do we calculate how much of an insurance do we need to have on ourselves? And secondly, whether to buy a term plan offline or online. Well, these are the most burning questions that you would have in your mind. But I won't touch upon these questions right now in this video, and you can catch up with these answers in my subsequent videos. You will need to wait for my future videos to know the solution. Remember, term plans are there to secure your family and their aspirations. So do not hesitate to write into us and we will guide you appropriately. This is Rajesh Hattangady, your shubhchintak. Till next Thursday with the promise of getting yet another video. Guruguruvaar.